Hi, this is Jeff at the Rising Team at Remax Main Street Realty. So as the market gets a little bit different, interest rates went up. We're always trying to find ways to benefit all of our clients, our seller clients who are having trouble selling their house because of interest rates, and of course our buyer clients who may have been priced out of the price range that they wanted because rates went up. So today I wanted to bring you a couple of different mortgage brokers that we work with. We got Christian from DIY Lender, one of our brokerage partners, and then Alfredo with Main Street Mortgage to talk about the new different options for home loans out there today. So go ahead and take it away, Christian.
All right, thank you so much for that, Jeff. So as y'all know, we are in an insane market. The market volatility with the rate increases have just been nuts. And I don't think any of us were really prepared for what we're seeing out there. So there are some really great programs to help combat that. And what I wanted to really dive into today was what a 2-1 buy down is. It's a type of financing that lowers the interest rate on your mortgage for the first 2 years before it rises back to the original permanent rate. So what does that mean? So let's say you've got your original interest rate is 8%. So then you do the 2-1 buy down. So you're buying it that percentage down for 2 years. So then your first year it's 6%, your second year it's 7%. And then on that third year, it goes back to that 8% interest rate that's fully amortized over the life of the loan. Now, this can be done by the seller paying for it. So what they can do is the seller, instead of maybe reducing the price of the house, they can take that 2-1 buy down, the money for that, the 2 points, and they can put that into an escrow account. And so it just sits there in escrow, and as it's needed to be paid for to do the interest rates, it comes out of that escrow account. What's really, really cool about this product though, is let's say that you want to go ahead and the interest rates correct themselves, let's say in 10, 12 months. Well, instead of going to that 8% on that third year, you could refinance, and the extra money that's still left in escrow goes straight towards your principal. So then you're awesome. Refinancing at a lower rate, which is really, really nice. So the rate is typically 2 percentage points lower during the first year, 1 percentage during the 1 percentage point lower in the second year. And again, it goes back to the third. I really do think that this is a great opportunity to jump on now so that you're basically, dating the rate, marrying the home. You still get the home that you're really wanting, but you're also getting a little bit of help with this crazy climate that we're in. Outside of the 2-1 buy down, we also offer a lot of other products that are really popular right now. So Alfredo, could you discuss some investor type loans that we have going on at MSM?
Yes, absolutely. Thank you, Kristen. We also have a lot of different programs aside from the FHA, the VA, the rural development. It's 100% loan, and it allows the seller to contribute up to 6% for closing costs and prepaids, which usually covers that. So it's a very affordable loan. We also have a lot of the bank statement loans for the self-employed, a number of other programs that are making basically homeownership possible for many that weren't before. So by all means, we're here to help. Any questions or whatever, please give us a call. We're glad to help and answer any questions you may have.
Okay, so just a couple follow-up questions. So anytime you get a new home loan, you have to wait at least 1 year to refinance anyway on any type of loan, correct? Would this be the same thing for the 2-1 rate buy down?
That's a great question. Typically, it's 6 months to a year is whenever you can refinance.
6 months to a year? Okay, I always thought it was a year for some reason, but 6 months? Okay, that's even better. Alfredo, what type of loan programs is the rate buy down eligible for? Can you do a rate buy down in rural development?
Yeah, conventional, conventional and on FHAs, yes. At this time. Yes. Okay. And so again, and just kind of adding to what Christian mentioned, so the rate in the first 2 years is lower, and that makes it a lot more affordable. But let's say rates come down and we're refinancing a year later or whatever, you don't have to be stuck in that loan. If rates went down all of a sudden, then of course we can refinance for you.
Okay, awesome. That's a lot of great information, and I'm really glad to hear that our mortgage brokerage partners are coming up with creative solutions to get people into homes. It's not fun when the rates go up as high as they did. And I know people call it, hey, historically it's been this. Like, it doesn't matter what historically the rates are doing. It matters what buyers are getting right now, right? That's what
Right.
really that's what people want to know. They don't want to know what their grandparents paid 22% back in 1980, right?
That's
wanna
correct. They want to know what's going on in 2022.
They want to know what they can get today. And this sounds like a great option for some of our clients that got priced out of their price range when they were planning on 5 or 6, and now it's up to like 7.5. You know, they can get that 5.5 or 6 for the first year, and then step it
Yeah.
up to the original rate. So
It
yeah,
makes a big difference.
it does
Yep, and
for sure.
fingers crossed the rates go back down. So
Yeah, then if they do, you just reach back out to Alfredo and, hey, let's do a refinance and get rid of this 7.5 or 8% for good, right?
Absolutely.
Well, hey, thanks for your time today. I appreciate you jumping on Facebook with me and explaining these programs to our clients out there that are watching. And again, if anybody wants to get a hold of Alfredo at Main Street Mortgage, I'm going to go and put a link in the comments to his Facebook page so you can reach out to him directly and start your home loan process.
Thanks so much, Jeff, for having us.
All right, you all have a great day.
Yeah,
All right,
you.
you too. Bye.
Bye.